Hi friends, good day. Today, let us try to understand about what are debentures and what are the types of debentures are available through this video. According to Robert Frost, a bank is a place where they lend you an umbrella in fair weather and ask for it back when it begins to rain. Before we go in,
please subscribe for more videos. Click the bell icon for updates.
what are debentures? A debenture is a loan issued at a fixed interest depending upon the reputation of the company. A debenture is also a type of bond or other debt instrument which is usually not backed by any collateral and usually has a term greater than 10 years. They are backed only by the credit worthiness and reputation of the issuer. When companies need to expand themselves and are in the need of funds, they take the help of debentures. Some debentures can be converted to equity shares while others cannot. The legal term debentures is originally referred to document that either creates a debt or acknowledge it, but in some countries the term is now used interchangeably with bond, loan stock or note. Thus, a debenture is like a certificate of loan or a loan bond evidencing that the company is liable to pay a specified amount with interest. What are the features of debentures? Debentures is a loan document that acknowledges debt. The debentures are the part of the borrowed fund capital. The holder of debentures are the creditors of the company. It is in the form of certificate issued under the seal of the company called as debenture deed. It contains the sum of amount borrowed and the date of repayment of the loan and the rate of interest. The interest is payable irrespective of the profit level, which means that even when the company is in loss, it has to pay the interest. Debentures can be secured against the assets of the company or may be unsecured. Debentures are generally freely transferable by the debenture holder. Debenture holder does not have right to vote in the company's general meetings of shareholders, but they have separate meetings to vote. For example, meeting on the changes of the rights attached to the debentures. The debenture holders are eligible to get a fixed rate of interest. They have the priority over the shareholders in respect of their claim on assets. In the event of liquefying the company, debenture holder get preference in terms of repaying the borrowed amount. What are the types of debentures? Based on the security, debentures are classified as 1. Secured debentures. When the company debentures are secured against assets of the concerned company, those debentures are referred to as secured or mortgage debentures. If the security is on the asset of the issuing company, then it is called as fixed charge debenture. Contrarily, if the security is not specific but general assets of the company, it is called as floating charge debenture. Examples for secured debentures are such as company or factory buildings. If the company gets insolvent, the loan amount needs to be cleared before selling the property. Number 2. Unsecured debentures. These debentures are created based only on the credibility of the company and does not have any security or mortgage against any asset of the concerned company. Therefore, the company doesn't offer any protection on the rate of paying interest or on paying off the loan amount to the holders. Number 3. Convertible debentures. Individuals who hold these company debentures can convert their assets into stocks. They are mixed financial tools which has the benefits of both debt and equity shares. Further, convertible debentures are divided into two types. One is partly convertible, where only a limited part can be converted into stocks as per the norms of the contract, and the other, fully convertible, where the entire debenture can be converted into equities. Number 4. Non-convertible debentures. These debentures don't allow the holders to opt for the conversion of the debentures in stock. These debentures act as debt only. Number 5. Redeemable debentures. If the debentures issued by the company are legally mandated to redeem the debenture certificate on a particular date and pay the return to the investors, they are called as redeemable debentures. Number 6. Irredeemable debentures. These debentures don't have a redemption date. They can be redeemed when the company will liquefy its assets or as per the terms and conditions of the debenture contract. These debentures are also called as perpetual debenture and are not allowed to be sold in the Indian security market. Number 7. Registered debentures. These debentures have all the credentials of the holders such as their name, bank details, residential address, etc., legally enrolled with the issuing authority. Hence, the investors must notify the company if the debentures have already been transferred to another individual, or else the accumulated return will be credited to the previous holder. Number 8. Bearer debenture. Contrary to the registered debentures, these debentures don't carry any registration with any specific investor's detail. With a mere delivery process, these debentures can be transferred to any new holders, and the accumulation interest is paid at the exchange of coupon attached to the debenture certificate. Number 9. Specific coupon rate debentures. These debentures are issued with specific rate of interest, which is called as the coupon rate. These rate can be fixed or floating. Number 10. Zero coupon rate debentures. These debentures don't carry a specific rate of interest. In such cases, in order to compensate the investors, such debentures are issued at a substantial discount. Issue of debentures for cash can be done in 3 ways. Issue of discount at premium is when the company is charged more than the nominal value. So, if a debenture with a face value of 150 rupees is sold at 160, then it is circulated at premium. Issue of debentures at discount is when the debentures are sold below the face value. For example, the debenture possesses a nominal value of 150 but it is issued for 140. Issue at par. Here the debentures will be issued exactly at their nominal price, that is not above or below the face value of the debentures. Issue of debentures for consideration other than cash. Debentures can be issued for non-cash considerations. The company may have purchased assets from any vendor or acquired some other business. Instead of paying cash, the company may issue debentures to such vendors. Issue of debentures as collateral security. Debentures can also be issued by a company as a collateral security against a bank loan or any such borrowings. A collateral security is a security that is provided along with the actual security against the loan taken. Debentures issued as such a collateral liability or a contingent liability for the company, which means the liability may or may not arise. Only when the company defaults on such a loan, this liability will arise. Well, thank you so much for watching. Please like this video and do share.